gold is now increasing as a tier one asset among central banks. So the ultimate long-term trend is gold has nowhere to go but up, never in a straight line. But compared to bubble assets, which go up and then tank, gold's not going to behave that way, and silver will rip when gold climbs. That's my view, and it's the view of many equity traders, bond traders, and others who are clients of us who hold their own personal money in gold, even though they're trading and speculating in risk assets. Silver, though, when gold really does break through, we can talk why I think gold will break through significantly in the next few years, regardless if it doesn't go in a straight direction. When gold really does rip through, silver is like that little speedboat. And that's why it's more volatile. It's more of a speculative asset, still a monetary metal.
Matthew Piepenburg, a prominent financial expert and author of Gold Matters, brings insights into precious metals and finance. In his recent insights, Matthew Piepenburg anticipates a substantial breakthrough for gold in the coming years. He also foresees silver rising concurrently with gold, aligning with the views of equity and bond traders who consider gold a tool for wealth preservation. The latest Kitco News weekly gold survey showed this week's bullish sentiment has fully taken hold on Wall Street and Main Street, with the overwhelming majority of those surveyed in both camps seeing gold gaining or trending sideways next week. The yellow metal is now on track for its 7th consecutive day of gains. Similarly, silver experienced a notable 2.2% rally, reaching $24.20, its highest level since the end of December 2023. Since the beginning of the month, gold and silver have seen impressive gains of 5% and 6.4%, respectively. However, Matthew's analysis goes beyond a typical gold bug argument, highlighting indicators like dollar weaponization, treasury leverage, and liquidity challenges. According to him, these factors indicate a global shift towards physical assets, especially precious metals like gold. Gold prices pushed higher Tuesday after futures pricing for the precious metal notched fresh records in the previous 2 sessions, with analysts seeing strength lasting at least into the second half of the year. All this buying gold and having fewer US dollars in the economy probably means changing the way the world handles money. Countries are expanding their gold reserves and are increasingly moving away from the US dollar and heading towards this dazzling wealth that sounds like gold. While focusing on silver, Matthew emphasizes the potential need for patience. He notes the positive influence of open interest moving from the COMEX to Bitcoin, foreseeing a beneficial impact on silver investments. Now, we present the clips of Matthew Piepenburg's insights from his recent interview with Commodity Culture. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Silver is done just fine when everyone's waiting for it to get to the multiples and to get to that ratio that it hasn't gotten to yet. And I don't have the answer. No one does. I see a lot more signs now, though, that we're getting closer. But even gold, when markets rip and then they pop, gold can go down with markets for a short period of time. We cannot deny that reality either. It's very sympathetic to falling markets because people need to make their margins or get liquidity. When gold is the only safe asset, sadly, when you've been burned in risk assets, you need to get your liquidity from your only safe asset. So again, but the long-term direction of gold for me, its best days aren't even begun. It's only in the 2nd chapter of a very long book. And the weaponization of the dollar, the grotesque over-leverage of the U.S. Treasury, the broken nature of liquidity in the U.S. markets and in the bond market, the unloved nature of the U.S. Treasury, the dumping of it by central banks, all of these things point to a world clearly moving away from the dollar and away from the IOUs of the U.S. Treasury and towards physical real assets in general and precious metals in particular and gold specifically. That is not a gold bug argument. That is absolutely happening right before our very eyes. An investor and you hold silver, you have to be very patient, and the rewards will be extravagant because gold will move, but silver will rip. The question is, like in any asset though, is what's the top or what's the ratio where you sell or where you continue to hold? That's up to each individual investor. But no, there is a strong case to be made with both gold and silver, as we're seeing, open interest outflows in the COMEX right now, 40 million ounces just out of the gold market, for example, in the COMEX. Most of it going to chase this concentrated, now centralized ETF for Bitcoin. I'm fine with that. Anti-fiat, they're leaving the COMEX. It's actually very, very good for gold and silver because all this levered fiat gold in the COMEX and the LBMA markets in London, now these levered parties, these counterparties, really have to come up with delivery to get these outflows, these net outflows. They don't have enough physical gold. So when all this money goes into Bitcoin to chase this top, to chase this bubble, and Bitcoin may or not be a bubble, we can get into that. That means there's going to be less physical gold in the COMEX, less physical silver in the COMEX. As Andy Schechtman and others have said better than me, there's just no physical gold and silver there. And when this euphoria comes back to reality, the COMEX is going to come up with some gold fast, and they can't lever it after Basel III. So there is so many setups fundamentally, geopolitically, and just historically for gold and silver. And again, gold has still outperformed the S&P since 2000. It's still out. It's going to outperform the US dollar because any fiat currency is going to underperform gold. If you hold it for the right reasons, wealth preservation and insurance against everything that's broken right now, except for the S&P, it can't outperform that. That's for sure. But if you're an investor and you're into wealth preservation, these aren't sales phrases. These are fundamental understandings of why you own precious metals. If you're a speculator, gold is not sexy. Silver will be sexier, but it certainly isn't sexy right now, and I get the impatience.
During the interview, MatthewPiepenburg confidently added that dollarization is an undeniable reality, while pointing to instances like bilateral agreements and the conversion of yuan into gold by Russia as evidence of this trend. In 2023, the trend towards de-dollarization gained momentum, notably among BRICS nations. Argentina, Bolivia, and Brazil have abandoned the US dollar for imports, opting for China's currency. This shift away from the US dollar is evident in the crucial oil market, where numerous countries are now using alternative currencies for oil purchases, marking a departure from the historical reliance on the US dollar in the Middle East. J.P. Morgan reports that the US dollar has fallen by more than 50% in foreign exchange reserves worldwide. Even though the dollar is holding its ground, he still thinks gold will start stealing the show in trade deals. According to him, the exciting fact is that gold is grabbing the spotlight all on its own without needing gold-backed currency. Let's get back to the interview.
Gold-backed theme and the role of gold are all intertwined. As I said in Vancouver, and with Andy and Grant and Rick and clearly some clever people who we all agree though on this, that the de-dollarization is no longer a debate, it's a reality. It's important to keep it in mind in terms of timing and pace. As I said then, to Brent Johnson's credit, look, 80% of world trade is still settled in US dollars. The SWIFT system is still massively predominant. The euro dollar market, the derivative market, 85% of FX transactions last year, all in US dollar. We're not saying the US dollar goes away or that its world reserve currency status disappears this year. It's happening faster than I would believe just 2 years ago when we weaponized the dollar with Putin. The speed is happening fast. The de-dollarization is now undeniable. And the implications we're all speculating on, but you can't deny the simple fact that more than 45 countries now are trading bilateral agreements outside the dollar. You can't deny the fact that 20% of last year's oil sales, that's incredibly important, were outside of the US dollar. That is devastating to the US dollar. You can't deny the fact that BRICS countries or Russia, can sell oil to China and China will buy it in yuan that Russia can then convert into gold in the Shanghai Gold Exchange. Why do they want gold for their yuan? Because they want gold, like every other central bank, because they no longer believe that 10 years from now, the US dollar is going to be the most liquid tier one asset. Even the Bank of International Settlements last year made gold a tier one asset. And again, this is not to be a gold bug. Look at the facts. The central banks of the world are net long, stacking physical gold and dumping U.S. treasuries. I said there, and I'll say it again now, it's like Robert E. Lee marching his army from Virginia into Maryland on his way to Antietam or Sharpsburg or Gettysburg. You don't need to be a military genius when you see the cavalry, the pickets, the scouts, and the infantry marching across the Potomac heading your way. Something's changing. When you see central banks marching towards gold and marching away from U.S. treasuries, the world is changing. Doesn't mean the war is over or the battle's over, but we're seeing tectonic shifts, as we said in Vancouver, in the trust and use of the US dollar. But it's important also to say that dollar, Army of Northern Virginia, Robert E. Lee, or Napoleon, doesn't die easily. It takes more than a headline or a clickbait headline to say that the world reserve currency is over. But to Rick Rule's point, the hegemony is still there. The supremacy is not. And so the world is stacking gold and dumping treasuries and getting away from the US dollar because that dollar, which has been dethroned since 1971 without gold, and its inflation exported to all over the world and bullied every country from Venezuela to Germany to Japan to China and Russia, and now weaponized against Putin, just doesn't have the same trust. And to Alistair's point, well, What is the dollar backed by? Full faith and trust in the US Treasury, in the US, but no one has full faith and trust. And his argument is essentially, as Russia has been saying for years, eventually we've got to move to a gold backed currency. Again, highly important, debatable point. My argument is they don't need a gold backed currency to have gold net settle their transactions. They don't need a gold backed currency to basically have gold become more and more predominant in the net settlement of trades. Many of these countries in the BRICS don't fully trust each other. They just don't trust America at all, or the US dollar and its IOU, but they do trust gold. And they don't want to give up their own sovereign right to print as much local currency as they want to stay in power. But when it comes to trading and settling, they do trust gold. So even without a gold-backed currency that could be redeemable at, say, a central bank in Russia or China, they can just transact in dollars but hold in gold and go through the Shanghai Gold Exchange and other exchanges. And gold is slowly becoming that tier one asset that the BIS gave it credit for. It's happening anyway.
From a fundamental, geopolitical, and historical standpoint, MatthewPiepenburg suggests favorable setups for both gold and silver. Analyst notes gold's consistent outperformance against the S&P, underscoring its reliability compared to US dollar amid challenges in the financial landscape. The big question is, how do you see these shiny metals shaping the future money game on the world stage? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.